Good morning to all of you participating from USA. Greetings to all of you participating from India. Welcome to Georgia Indo-American Chamber of Commerce's COVID series webinar, PPP program, Forgiveness, Accounting, Tax, and Legal Implications. My name is S.K. Raj. I'm the president of GIACC. On my professional side, I'm the vice president of an Atlanta-based technology company called 4R Tech. Today, we have three distinguished speakers, Kirtan Patel, Atul Deshmukh, and Shishir Lagu, and a special address by Yatin Gandhi of Encore Enterprises. Together, all four will answer the burning question of the day. I got the PPP loan. How do I get forgiveness promised by the government, and what are its implications? For those of you who don't know what GIACC is and what we do, GIACC is a non-profit volunteer organization with a mission to promote trade and commerce between India and US, specifically state of Georgia. We do this by hosting events like Indian Film Festival, socials for members to network and working closely with the Consulate General of India, hosting delegation from India and sending delegation to India. Our members include small business owners, attorneys, bankers, and career professionals. Our sponsors include UPS and ICICI Bank. We also partner with other chambers like Korean American Chamber of Commerce and Indo-American Chamber of Commerce. The webinar today will be moderated by Sonjui Kumar. Sonjui is past chairperson and current member of GIACC board. On her professional side, Sonjui is the founding partner of KPPB Law. With great pleasure, I pass the baton now to Sonjui. Enjoy the webinar. Thank you.
Thank you so much, Raj. Welcome, everyone. Like Raj said, this is our fourth in a series of webinars we've done during this pandemic, and we try to bring, issues that we think will be of interest and importance to the community. So before we get started, I'll just do a little intro on the PPP program. It has turned out to be one of the most popular programs that really the United States government has ever put out there. And just the recent numbers, I just looked at today's numbers. So as of June 30th, when the loan program was supposed to end, it's actually been extended through into August because there's still money left. But 4.8 million loans have been given for $5.2 billion plus dollars. With almost 5,400 lenders involved. The average loan amount, well, actually 67% of the loans were under $50,000, as it was targeted to address small businesses and their payroll costs immediately after we went into lockdown. And the average loan size is approximately $107,000, with 86% of all loans being less than $150,000. So a lot of those stats are available on the website, but here we are. The loans first became available at the beginning of April, first week of April, and here we are now in the second, third week of July, and the question now is, all these loans that have been used up or are being used, how do they get forgiven? And that is what our speakers will address for you today. We are going to, like Raj said, have one of my partners, Kirtan Patel, talking about the legal implications. We have two of our professionals and partners with GIACC from KNAV that will speak about the tax and accounting implications. But we'd like to start off with one of our colleagues and friends, Yatin Gandhi. Yatin is a senior vice president and CFO at Encore Enterprises, and he has a strong background in financial management. We have put his bio up on the screen, and he's going to address just questions that companies have and issues that have arisen for companies in connection with both the actual loan itself and the forgiveness of the loan. So with that, let me turn it over to you, Yatin. If I have missed something in your biography, please feel free to add that. And please welcome Yatin Gandhi.
Thank you, Sonjui, for the introduction. I think you pretty much covered everything here. Good morning to all the listeners, and thank you to Anita, Raj, and all of you for inviting and giving me the opportunity to talk about payroll protection program and how this program has affected all of us, and just to kind of hear our perspective of the implications of this program with the business community. So we have been into fourth month, or it's been 4 months since this, officially 4 months since the pandemic started, and the whole life has changed, the whole world has changed. So essentially, what we have learned along the way in the past 4 months. Some interesting facts I would like to kind of mention here. It could be, kind of a little funny as well, but these are the facts. Mexico and Canada, they essentially closed their borders. I mean, can you imagine that? NFL games, the NBA games, and the basketball games, they're going to be played without the fans this year. Schooling, the virtual meetings through Zoom and Teams are the new norms in today's world. And these two are very interesting. Texas state is becoming a swing state this year. And when the elections are nearing in November, God knows what's going to happen with Texas state. And lastly, this is my favorite, the online barbershops and saloons are going to be the new norms. So these are the basic facts, but the harsh reality on the other end is this. I mean, COVID-19 essentially is inversely affected the markets. And what I mean by that is, as the COVID has become more worse, the markets have become better. They have really performed better. So what has made this market behaving this way? It's all the stimulus money. It's all of the trillions of dollars put in by the feds and by the government, essentially to bring liquidity in the market and essentially keep the economy running and floating around. So the fundamental question is, how long is this going to continue? And what are the repercussions once the government is out of money? So these are the questions which are unanswered, but it will be interesting to see the next rounds of PPP when they come along and how it affects all of us. But as an organization, I wanted to kind of touch upon where we are today, how we have used this program, and how the benefits of the PPP funds have really helped to keep moving our assets. So as an organization, Encore, we have several business units, and the two main business units which were significantly affected by the COVID was the hospitality and the restaurants. So all of us know with hospitality, the travel stopped, and then the occupancies have dwindled down since then. And then obviously with restaurants, people no more going to the restaurants, it has affected the restaurant world as well. On the real estate side, we had a dual role to play. So on one side, we were the landlords, where we were collecting the rents from our tenants, whether it's a multifamily apartments or commercial shopping center tenants or an office tenant. And on the other end, we were the tenants, where we were requesting all our landlords, where we had restaurants, asking for the rent relief and the payment plans. So we kind of played a dual role. And with all of this, we experienced that PPP funds played a very significant role in managing our operations and the working capital needs. As an example, we went out to all of our vendors, we went out to all of our debt partners, our lenders, and essentially asked for the relief. And that's when, the PPP money has helped us in running the payroll for the number of employees who were still with our operations and continuing to run the show. However, we also feel that the PPP money has come with a lot of complexity and a lot of compliances. I mean, you know, as an example, we had this issue about ownership and affiliate rules. I mean, we have several business units, as I said, and we have ownerships from 1%, 2% to 100% in some of these projects. So how does the rule apply? How does the PPP money going to be looked into when it comes to all of these affiliation rules? Because if you look at all the business units combined, we're going to be over $2 million. And then how the safe harbor rules and how the other certification rules surrounding the compliance are going to be eligible. So we have been going to be relying on all of our experts and all of our outsourced partners in handling all of it. But here is what we have concluded, that forgiveness is going to happen. And the reason we say it with confidence is because when the legislation and the Congress came, essentially extending the program from 8 weeks to 24 weeks, and essentially from 75-25 expense split to 60-40 split, it kind of made it obvious that they wanted to essentially help the small businesses to essentially have the forgiveness of the loan. Now, I do not know the answer why the compliance had made it too cumbersome on these small businesses, the number of forms we need to fill out, the number of documentation we need to keep. But these are some of the things which we're going to rely on the experts. Another example is the sold businesses. You know, we have been funded on the PPP funds, and then we sold the businesses before we used up the entire money. So what do we do with the excess money? So we've been working through all of these nuances and essentially how it's going to affect the overall the compliance piece. But here is what we know. As I said, that the loan is going to be forgiven, and no matter however we go through these steps of going through the compliance piece, and essentially what we will be doing is we will be, you know, talking to all of our partners. We've been talking to all of our payroll partners to essentially come up with those payroll reports, which can help us with the documentation. And with all of that, we're going to be doing the full compliance. So what's the horizon going forward? You know, we think this is the last month where we are going to be completely spending off the entire the PPP funds in the first round. So what is going to happen after that? I mean, especially with the hotels, the travels has not come back yet. I mean, people are still traveling through public transport. They are not using airplane. They're just driving through the nearby places. Just recently, they have started to take vacations. So how is the hotel industry, the restaurant industry is going to come back? It is going to take a while. It is going to take anywhere between 6 to 8 months in our projection, if not more. And then what do we do until then? So all of these operations which we need to run, and especially the debt payments to make to the lenders. I mean, CMBS debt financing has made it very difficult for the hotel industry to essentially comply with the monthly payments and the kind of terms they're giving today to all the companies. It's just been ridiculous, you know, and there is no way to continue to make those payments if we're going to have this pandemic for the next several months. So the next round of PPP is absolutely coming. The $3 trillion, the bill, what the House has approved already, I'm sure Senate is going to approve very soon, and it is expected to see in next few weeks from now. But here's what we are concluding today is that with all of this, there is going to be foreclosures. There is going to be some issues surrounding on running the operations and running the show. However, we still feel that government is going to come up with this program till the economy comes back. The only question is when. So these are some of our perspective of where we are today and how we're going to be in future and how the future looks like. It's just the people who are sitting on cash, they're going to be the surviving through most of it. But I'm sure the people who are small business owners, it's going to be a tough time around the clock here. But the government is definitely going to help with the next set of PPP rounds. So with this, I'm going to pass it back to Sonjui and then take it on from there.
Yatin, thank you so much. That whole CFO perspective, company perspective is so important. I mean, you guys are on the ground, you know, utilizing the money and trying to stay compliant at the same time. So with that, we're gonna go to Kirtan. Kirtan Patel is my partner here at KPPB Law, also a founding partner of our firm. And he is going to really address some of the legal aspects of the application. What's been interesting with the application and really with the loan right from the beginning is that there's constant guidance coming out from the SBA. I feel like it's almost like a social media account. They're constantly posting something new, you know, about the loan, and that has not, that has continued through the forgiveness process. So Kirtan is a real estate and banking lawyer representing a number of banks and managing complex financings for borrowers and also representing lenders in their loan transactions. So it's quite familiar with how the banking process works. And with that, Kirtan, let me turn it over to you.
Thank you, Sonjui, and thank you, Yatin, for the great overview of what the purposes of these loans were and how they're being utilized and you know, being implemented. You'll hear from the folks that are probably going to be, if you're in the business, your best friends, your CPAs, who should be your really good friends anyways, because this process, this forgiveness application is going to require you to lean on them and their help in filling these forms out. So I'll just briefly go over the application process, and but I'll not delve into the details of what all you will have to do within the process, because a lot of that will be covered by our next speakers. So once you have, so there, you know, the after the first round of the PPP that was announced, the PPP was given out. There was a lot of confusion about it. Then on June 5th, there was an extension granted on the PPP. Some changes were made. But in the beginning, it was basically 8 weeks of eligibility, right? So you would have to use the money within the first 8 weeks. The goal was to hopefully you keep your employees employed and pay them the money. This was a way for the government to give money to people through you, but in a form of a loan, which could be forgivable. Then around June 5th, they came out with an extension because there's still money to be given out. There's more help that was required, and there were changes made. Specifically, they took into consideration companies like Yatin's and said, look, the hotel folks are still not going to be able to bring all their employees back. They need more time. And so a longer period was granted, up to 24 weeks. And that allows some of the hotels that are going to open up later on to bring in their folks. So where will you go? And let's assume for a second that you have already spent all your money. What are you going to do? Well, you get to apply for forgiveness. That's something that you should do as quickly as possible, so that, you know, as more information is required, you're able to supplement it. So first things that you would do is you would call your lender, and most lenders are very proactive, because you got to remember, they also are very interested in getting these loans off of their books, right? They want forgiveness on these loans, so that the SBA pays them the money and pays your loan off. That's how this is working. So, excuse me, the loan application process, either you file what is called a 3508 or 3508 easy form that is available, or your lender may have a process. The SBA is allowing the lenders a lot of latitude in terms of determining the forgiveness process, but it's very streamlined with the SBA process, and you know, going through that, it is rather document intensive, as well as you will need a lot of help from your accountant or your controller, whoever is in the office with you. Now, once the lender receives your application, they have 60 days to issue a decision whether you qualify for a forgiveness or not. If they say no, you could still appeal that process. But if SBA, along with the lender, has determined that you're not eligible, well, then you're not eligible. You're for forgiveness. So keep, you know, So my point to you would be, don't wait to file the forgiveness, get on it. Okay. And then the next process is the lender then goes and asks SBA for payment. SBA takes within 90 days, SBA pays the lender back. And in between all that time frame, there is some interest to be paid. Excuse me. The borrower can apply for forgiveness once you have utilized all the funds. Okay. And your application must be made within 10 months of the end of the forgiveness period, which is 12/31/2020. Otherwise, any amount that has not been, all the amounts within that time, outside that time zone, will be deemed unforgivable or ineligible for forgiveness. The first payment by borrower on any amount not forgiven is due when lender receives payment of forgivable amount or when lender receives denial from SBA. So you made the application, the lender gets, okay, says, okay, out of the $100,000 that you received, $80,000 is forgivable. You get the $80,000 forgiven. The $20,000 is the note that you're carrying. Remember, this note was originally set up for 2 years, but now with the extension, it goes up to 5 years, within which you have to pay that money. And it accrues an interest rate of, I think, 1%. Okay. What are the required documents that you would need? The SBA form 3508 or 3508EZ is going to need to be filled out. I will tell you, I am working on filling that out on one of our projects, and I will tell you, it is, I'm a lawyer, not a CPA. It is intensive. Maybe for my purposes, it's intensive. Maybe not for the CPAs. You'll need your payroll reports. You'll need your payroll tax filings, income payroll and insurance filings, documents verifying retirement and health insurance contributions, documents verifying any other eligible expenses such as your rent, any mortgage payment that you have made that may be eligible, and any other documents that your lender requires. And most lenders are actually pretty good about it because they have processed a lot and they have streamlined the process quite a bit. At least some of the lenders that we are working with, we have found that to be the case. Our clients have been fairly streamlined in the process. By the way, you need to retain all the supporting documents that you're going to provide as part of your forgiveness for 6 years. Okay. The eligibility factors, as I mentioned before, you must use up all of your funds to qualify for forgiveness. At least 60% of PPP funds must be spent on payroll costs. You may remember when it first came out, 75% was required to be used, but at least now, just like for people like Yatin and companies like that, they have made some room that you could use an additional amount of money out of your PPP loan to be used for other eligible expenses and not just for payroll. Expenses eligible for forgiveness must be made within 24 weeks of the loan's first disbursement and by December 31, 2020. Previously, it was 8 weeks. Loans made before June 5, that you have 8 weeks within which to use up all of those monies. But now you may elect either 8 weeks or 24-week period. And that's part of your, that is going to be part of your, and you'll make that election within the 3508 easy form too. If borrower fails to maintain the number of employees on its payroll or maintains its salary compensation levels at least 75%, the forgiveness amounts will be reduced. Now that is a formula that SBA will use, and that is something that you should work with your CPA on to understand what those formulas will be or what your eligibility will be on those. Our initial advice to our clients was, hey, use maximum amount of money and if possible, all of it for your payroll. That is just an easy forgivable position. But I understand that that advice is old. As Sonjui said, things are changing. There is more room now to maneuver within the eligibility. If the SBA determines that the borrower was ineligible for PPP loans, the loan will not be eligible for forgiveness. So yes, the lender has a lot of latitude. Lender gets to recommend to the SBA, but SBA does have the final say on it. And they could choose to say that some of the things, or this entire loan was not eligible, and they do have that say. You can appeal it, but again, it's still within SBA's hands. And if this is not approved, if the SBA doesn't give the approval, lender may allow borrower to submit additional documents to lender, give supplemental information with your appeal to reevaluate. So this is not like one and done type of a scenario. There is a process. There will be appeals processes made on this, but SBA will do, general rule is for the SBA is to help the small businesses out. They generally are fairly good about it, but remember, you're gonna be all part of that process. Any economic injury disaster loan, what was called the IDL, advance amounts will be deducted from the forgiveness amount. So if you've got that $10,000, that will be reduced. And any amount that is not eligible will be at about 1% rate annually, and it will be for a 5-year term within which you have to make your payment. Now, there are other concerns. Businesses that receive more than $2 million are going to be automatically audited. Just understand that is going to happen, okay? And business receiving less could be audited, but I have not seen anybody make a hard or fast line yet. So, if most business, as Sonjui says, was less than $50,000 in loans made, there's a good chance that it may not be audited, but that doesn't mean that people, not submit proper documentation, but understand the risks that exist when you have taken more than $2 million. And I think I'm out of time, so I'm going to stop at this point and take questions whenever they are available.
Thanks, Kirtan. We have quite a few number of questions that have come in, so we'll get to those at the end. So if you're keeping count, I think the phrase CPA has been used several times already. And so I think you get the point that this is a very CPA-driven process, the forgiveness part of this application. So with that, we'll turn to the two CPAs that are our speakers here today. The first one we're going to hear from is Atul Deshmukh. Atul heads the International Assurance and Advisory Practice of KNAV. KNAV is actually has offices all over the world, but Atul, lucky for us, is here in Atlanta. So Atul, let me turn it over to you. And Atul is going to talk about the accounting guidance related to the PPP loans and also how you actually calculate your forgiven amount. So Atul.
Thanks, Sonjui, and good afternoon to everyone. I guess Yatin and Kirtan have taken up quite a few items with respect to how the PPP is basically unraveling today. I'll take the first part. There are two parts to this that I'm going to speak on. One is obviously the question of how do you calculate the PPP forgiveness amount. It is a step-by-step mathematical process. It's not something which is very easy, simply because of the use of certain terms, and there are certain nuances which are there. The very basic step, or what we call it as step one, is going to be to track the total eligible costs. Now I'm going to speak like an accountant. So we are talking about the total eligible costs incurred and paid. So both those words are important, and the word "and" is important. So incurred and paid during whatever you determine to be your covered period. Now the covered period, Kirtan alluded to it. If you got your loan before the 5th of June, then you have the option to use either an 8-week period or 24-week period. But if it is after the 5th of June, then you are in the 24-week period bracket. So in the first instance, you will collate all your payroll cost incurred and paid during that period, your mortgage interest, both real property and personal property, rent, leases, again on real or personal property, utility payments, all of that. Those are the amounts which will be all captured. We have an overall restriction that the payroll cost need to be at least 60% of the total forgiveness amount. So that's an important criteria that you want to kind of look at. After this, there is an adjustment to be made for any reduction in payroll. Now, this basically is a case where what the PPP is requesting you to do is look at all your employees who were paid salaries during the year 2019, and you have to look at those employees where the payment was less than $100,000 on an annualized basis. And if during the month of March, if you paid them a salary which was less than, which was a reduction by more than 25%, then the reduction in excess of 25% is the amount which you will not be allowed to claim, or you will need to reduce from your forgiveness amount. So that's one calculation. There is another tricky calculation, and that is with respect to a decrease in the full-time equivalents. Again, there are caveats put in there because you can actually catch up to those full-time equivalents in a later period. But if during your covered period, if you had a decrease in full-time equivalents, then you would actually arrive at a full-time equivalent reduction quotient, which would also be used to reduce the PPP forgiveness amount. So these are two, you can call it, impacts that would go into, step 2 and step 3. One, as I said, a reduction in payroll. Secondly is an impact due to a decrease in full-time equivalents. And all of that would be captured, in your step 4, where you will actually capture the reduction in your forgiveness amount. And then finally, come to step 5, where you will test again the score from a perspective of your payroll cost for forgiveness floor, which is the 60% barrier. Finally, coming to what would be the PPP forgiveness amount. Now, just so that you're all aware, at this moment of time, the SBA is still finalizing all its guidance. So there might be even more guidance that might be expected with respect to how and in what way you actually fill up the final form. The second aspect where there are a lot of questions always comes up is with respect to accounting guidance for the PPP loan. Now, the AICPA, the American Institute of Certified Public Accountants, came out with accounting guidance. And for that guidance, there are multiple ways in which you could account for this. The first, method that they advocated was to treat, the amount of the PPP loan as a debt. So you go to Accounting Standard Codification 470, and on the receipt of the money, you basically, record this as a financial liability. Now, once you record this as a financial liability, then derecognition would occur because of 2 probable events. One would be if the loan is in part or wholly forgiven, in which case you would have a derecognition, or secondly, if the debtor actually pays off the loan, then also you would have derecognition. Now, in the first case, which is if the loan is partly or wholly forgiven, then when that event occurs at that point of time, you would actually record a gain on extinguishment. So this is one methodology which has been presented by the ICPA. The second methodology which is allowed and which has also been endorsed by the SEC is with respect to using something from the international accounting standards. So IAS 20 deals with accounting for government grants and disclosure of government assistance. So they are allowing you to alternatively apply that. Now, generally, government assistance under IAS 20 is not recognized until there is reasonable assurance. Quite similar to the term probable, which is used in US GAAP, that the conditions attached for forgiveness are actually met, and there is probability that the assistance will be received. Now, you have already kind of received the money. The question of whether the loan will be forgiven depends on you actually incurring the cost and paying those amounts. So effectively, what IAS 20 will require you to do is, it will actually, treat this as, again, first as almost like a grant received in advance. So you record that as a liability, and then as you incur the expenses and pay for those expenses, you systematically then transfer the amount to, and again, two ways in which you can account for it. One is either you can treat it as other income, or you could also reduce your costs. So it could be a netting of the cost that you are actually are the condition for the forgiveness. So your payroll costs, your rent, your leases, your other expenses like utilities. So as you incur them and pay them, you could also, because you believe that it is probable that you will actually meet the conditions and you will actually receive forgiveness, you could basically do that. There is additional guidance which has been also provided by the AICPA. There is similar guidance under ASC 958, which they say that you can also apply as an analogy, or they are also allowing you to treat this as a gain contingency and use ASC 450, which is accounting standard codification for gain contingencies, to account for this. So that's the broad contours about the accounting guidance for PPP loans. So Sonjui, I'll take a break here. Again, open to questions later as they come, but that's the situation as of now.
Thanks, Atul. I think you just proved why we need you, because there is a lot of nuance there. Anyway, that's not the purpose of this webinar, but yeah, there is quite a lot to look at. So next, we're going to hear from one of Atul's partners, Shishir Lagu. Shishir is also a partner at KNAV. He is based out of Mumbai, but he is a US certified public accountant. And he is going to talk to us about some, I guess you would think of them as maybe hidden issues, some direct and hidden tax issues when it comes to the PPP loan and especially the forgiveness part. So Shishir, look forward to hearing from you.
Thanks, Sanjay. So what the CARES Act provided was that the debt discharge, which would happen from this PPP loan, will have to be excluded from the gross income of the businesses for the federal income tax purposes. So that made the PPP loan really valuable because it was not just the grant, but it was actually a tax-free grant, which was happening. So let's say if you get a PPP loan of $1 million, and if it is completely forgiven, then the entire 1 million is kind of a grant, because whatever expenses you incur out of this is a net benefit which you have. However, the taxpayers' happiness was kind of short-lived, and just about a month later, on 30th April 2020, IRS issued this notice 2020-32, wherein it said that given the fact that this PPP loan for forgiveness is exempt from tax, the expenditures which are incurred from this forgiven loan would not be allowed as a deduction for federal income tax purposes. So what it suddenly did is, in my example, $1 million of loan, today I was saying that, okay, it is completely tax-free. Now, suddenly I'm saying that the $1 million of expenses, which would have been otherwise deductible to me for tax purposes, are not allowed as a deduction going forward. So which means that, assuming a federal tax rate of 21%, $1 million into 21%, about $210,000. So that's the additional tax cost which I am now incurring on this PPP forgiveness. So the net benefit, which previously was $1 million, comes down to about $790,000 now. So this IRS notice kind of reduced the benefit which was intended through the CARES Act. There have been several bills which have been submitted to the Congress to overturn the effect of this IRS notice. In fact, AICPA has gone on to record supporting the legislation for the allowance of these deductions for tax purposes. To be honest, nothing has materialized as yet, and we will have to wait and watch whether there is any change which happens to this position. But as it stands today, the IRS notice is a supreme guidance, and that's how they are looking at it. The real question is now going to arise in Q3 when the loans start to get forgiven, and that's where, if this kind of clarity, there is no complete clarity. I mean, like I said, at this point, the IRS notice is supreme, but still, since the efforts are being done to overturn this notice, there is going to be an uncertainty in the minds of the taxpayers when they make the estimated tax payments before September, because they are going to be like, okay, whether we should be paying taxes, whether this amount is going to be disallowed. So, the absolute clarity on this, earlier the better, but we will have to wait and watch. Coming to the state tax aspect, so whilst the federal provisions are a little clearer, there is still a little bit of an ambiguity or absolute ambiguity as far as the states is concerned. So while some states have started issuing specific guidance as to how they would treat this PPP forgiveness, not all states have really come up with a guidance. The taxpayers will now start to, kind of look at how the states will treat depending upon how they are conforming to the provisions of the.
Did we lose Shishir?
I believe so, Sonjui.
Okay. I don't know if anyone can step into what he was talking about. Atul, do you have?
Sorry, I'm back.
You're back. Thanks, Shishir. Lovely.
Okay, so what I was saying is, there is going to be a, there are certain states which conform to the Internal Revenue Code as also the CARES Act, and those are the states which more likely than not are going to follow the federal treatment even for the state purposes.
Looks like we have a bandwidth issue with Shishir. Let's give it a second. He came back last time.
Sorry, the bad network. Okay.
I know. Go ahead.
Yeah, but yeah, so I mean, so the states will have to be looked at. Unfortunately, for state of Georgia, it is not conforming to the federal. So as the guidance stands today, it is more likely than not that the PPP forgiveness will be considered as taxable. Yeah, it will be taxable.
Shishir, you're going in and out, so I know you closed your video. Maybe just come closer to your mic, maybe.
Sanju, I believe it's actually an internet problem, meaning his bandwidth is not enough for him to support the session. So you may want to jump into the Q&A.
Okay. So let's do this. We have several questions. I know what Shishir was saying was fairly critical. So what we will try to do is we will circulate his notes to everyone who is registered for the webinar today, so that you have the benefit of the rest of his commentary. I think what he was ending up with saying is that we are unclear on many states and the state implications with regard to forgiveness when it comes to taxes on the loan amount. So with that, I would ask Yatin, Kirtan, Atul, and Shishir, if we get them back, to please be available. We've received several questions. I think this one can really go out to everybody, but it was directed to Yatin, but maybe Yatin, you can start. So there's a lot of talk and writing and news about people that got the PPP loan that, you know, folks thought shouldn't get it, including the IRS, you know, large businesses, public companies, companies with you know, large backing and ownership. So has anyone heard anything about if the government will try to claw these back? And is there any, you know, is there any news that we've heard about this particular aspect of the loan?
Yeah, sure, Sonjui. So as we all know, you know, we had large hospitality company who had opted for millions of dollars of PPP, and they were granted those funds in the first round. Similarly, there were a couple of restaurant big chains who also kind of went the same phase, and they eventually returned some of this money back. But the way we look at it is how is the overall structure? You know, I mean, as an example, when I said about the affiliate and the ownership issues, that's when it's a key. I mean, today we have several hotels and several restaurants, and we might kind of essentially fall in the same kind of an assumption where some of the big companies went through. However, our ownership structure is very different. You know, we are, as I said, could be ownership of 2 to 3% versus 100%. So how SBA, IRS is going to look at all of this is going to be important, but we are maintaining proper documentation, proper support, and essentially keeping all of our ducks in place just to make sure that we have proper documentation to support our position. But absolutely, there is going to be the audits, and SBA is going to come back and absolutely look for those people who have really misused the loans.
Right. Anyone else have anything?
Yeah, I think the critical point, at least in the beginning, was and you know that people have not paid attention to it afterwards, and it might become an issue as we go later on. Point was whether you would not have had other sources of availability. So if you're a publicly traded company, you know, that liquidity and that availability was there to you, and that's where the backlash was coming from. Now, a company like Yatin's or other people's, you don't have the ability to raise that kind of money, and your lender was not coming to give you that money, and that liquidity was not available to you. That is probably going to be something that they're going to look at and say, well, you made a representation saying that you needed the money and that you had no other way of getting the money had it not been for this. We have not seen how that is going to be applied, but that is probably the thing that they would focus on in my thought process would be if we're looking at it from a regulatory standpoint.
And I think, Kirtan, you already mentioned this in your remarks, that there's pretty widespread understanding that anyone who got more than $2 million, which of course the maximum amount was 10 million, but anyone who got 2 million should look forward to an audit. And that, by the way, is not an IRS audit. It's an audit by the Office of Comptroller and Currency. So we've heard a lot about that. Shishir, are you available to finish up your remarks?
Yes, absolutely, Sonjui. So I will
Maybe
just
quickly. I'll give you a minute. Go ahead. Yeah.
Okay, I will just skip. Yes. So my last point was, obviously you covered on the state parts that there is an ambiguity. My last part, which I was going to cover, is this PPP loan forgiveness also needs to be looked at in line with the other provisions of the tax code. So let's say, for example, section 174 R&D credit. Now, section 174 for R&D credit says is the expenditure which is claimed as a deduction for tax purposes is something which you can consider for R&D credit. Now the question is that since this expenditure is not going to be allowed as a deduction for tax, whether there is a double whammy because this expenditure cannot even be then considered for R&D credit. So one cannot just look at the tax cost in the purview of that, okay, this 21% into the forgiveness is my tax cost, but one may also need to look at the other provisions of the tax code to be sure that what is the tax cost because of this loan forgiveness.
Okay. Thank you. Very important point. Thanks, Shishir. And thanks for all your remarks. So one question that folks are having is, you know, what is the timing for this forgiveness? So Atul, should you immediately file for the forgiveness? You know, what benefits do you have if you wait?
So I guess the current fact of the matter, Sonjui, is that, you know, the banks are not ready. So while the forms in their current form are available, the portals of the banks are just not ready. Most of the online portals will actually be ready around the first or second week of August. So while you might want to, you know, and you might be very keen to, you will just not be able to. Secondly, again, you know, there has been, as we have kept on seeing this, there have been multiple guidance issued by the Treasury and SBA. So given that, you know, one can never be sure as to which one is the last and the final word with respect to what is expected. Given all of that, I just feel that yes, it's a good time if you already spent the money to put your documentation together. There is a calculator effectively available because of the way in which the form is structured. So it's a good idea to basically, you know, take care of it. But the payroll companies are still not yet ready with providing you the payroll reports, which are, I would put them in inverted commas, PPP loan forgiveness compliant. So you need to get those payroll reports for that specific period out from your payroll companies, because that's going to be a big chunk of you know, your loan forgiveness application. And also the bank portals need to be up and running for you to be able to upload all the documentation with respect to the forgiveness. So I would just say that it is probably going to be a little bit of a wait with respect to that.
Yeah, I think what you're addressing, Atul, is really the practicality and logistics of this loan. So we saw that on the application side as well. Yeah, the money is there, but how do you actually go about getting it? Are the banks ready for you? And I think we're running into the same issues on the forgiveness side of it. So one thing, someone asked a question, which I think just may show a little bit of a misunderstanding about the percentages. So really, maybe Shishir, Atul, either one of you. So there was a question that if your payroll costs are actually 90% and your other costs are 10%, are you still eligible for the full forgiveness amount? So Atul, if you could, or Shishir, one of you could just address that quickly.
Absolutely not a problem. The floor is just 60%. So if you're saying that during the covered period, your payroll costs actually make up 90%, it is great. It is fantastic. You're, you know, well and truly eligible for the forgiveness. I don't know whether Shishir has anything more to add, but that's where you are.
No, absolutely,
I think
Atul. I mean, yeah.
Go ahead, Shishir.
No, I said absolutely. I agree with Atul.
Yeah. And just really a related question on that is that if you got your loan in April, so April 29th, for example, do you use the 75% number, or do you use the 60% number in terms of payroll costs eligibility?
So I think Kirtan can, you know, again reconfirm it because he's the lawyer on this panel. But the new norm is 60%. The 70%, 75% is no more the norm anymore. So we can move past the 75%. It doesn't matter when you receive the loan. It is only the covered period which we talk about, whether it's an 8-week period or a 24-week period, that was affected by the timing of when you received the loan. There were also certain other nuances as to your own eligibility, as to whether you should have received the loan. Now, those were determined by certain dates as to whether you received it before 5th of May and so on and so forth. But when it comes to the amount of payroll cost today that you need to have for forgiveness, the floor is now 60%.
Concur.
Okay. So we have a couple more, I think we'll be able to get to a couple more questions before we wrap up, and the idea is to try to answer as many as we can. So there's a question about calculating your average FTE. So when you calculate your average FTE and your covered period that you're using is the 8-week covered period, do you have to calculate your average FTE over the 8-week period or the 24-week period?
It is an interesting question, but yes, it is over the, you stick to your covered period per se. And as a matter of fact, there are further nuances within that. So I don't want to, say it's not possible to describe everything at this point of time, but the short answer is stick to your period.
Yeah, your covered period is your covered period. So
yeah. And then on the worksheets, Sonjui, that most banks are going to be giving you, and that are going to be part of the 3580, they help you with some of those calculations.
okay. There are some questions on this one particular topic. We've gotten them directly from clients. I don't know if anybody has some helpful hints for it, but the gist of the question is people have had folks on and off the payroll. So you had people on the payroll, but then they were off, and then you brought them back. So when you're calculating payroll costs, when you're calculating the FTE, how do you deal with people that have been on and off the payroll?
I mean, I can take a crack at it and say, basically that 24-week period is what allows you to make that determination happen, right? I mean, like, well, our hotels were open for the month of May, but we had to shut down for the rest of June, right? And all the employees were let go, and then we brought them back in July. So your eligibility, your period, your covered period has gone off on that number, but the extension of that 24-week period, the purpose was to do exactly this, was to allow you to bring your employees back. So
yeah.
And Sonjui, I concur with Kirtan on this, because we have had these instances with our hotel portfolio as well, where we have followed so many of our employees. And also we have another dental practice division where the practices were completely shut down for the month of April. And when the practices came back again in May, all of these employees were rehired and then essentially put on the payroll. So to answer, I mean, I also feel that the 24 weeks pay period extension, what the legislation gave, essentially is going to help with all of those examples too.
Yeah, I think they're, like you said, Yatin, you put it very well. The government wants the loan to be forgiven. They would like you to get forgiveness. And that's why some of these accommodations have been made. And definitely the extension to 24 weeks was for that. I'll just say on this one issue, the FTE issue, we've done a lot of analysis for different companies, especially hotels and restaurants is one category, but also staffing companies. IT staffing companies that really depend on people having a client site to be at. They've had a lot of back and forth where they've brought people in and then they've taken people out and then brought them back. There's been more movement. I think it has to be looked at. The analysis has to be done very carefully to make sure you meet the FTE requirements. So I think we are now, unfortunately, at the end of our time. What we are going to do is this session has been recorded, so that will be made available to participants also on the GIACC website. We really, really want to thank our panelists, Yatin, Kirtan, Atul, and Shishir. And I am going to ask Anita Nainen, who is the chairperson of GIACC at the moment, to close us out here today.
Thanks, Sonjui. It gives me great pleasure to give the concluding remarks to this great webinar on a great topic of great importance and relevance to several of us in the community. My first thanks is to all the attendees who made themselves available to join us and for all your insightful questions. Thanks to Yatin for his macro perspective on the PPP program and loan forgiveness. Thanks to Kirtan for deep diving into the processes and the legalities of the application process. Thank you to Atul for sharing the accounting guidance and the calculation of the loan amount. And of course to Shishir, though you did get cut short, and I'm so sorry about that, but we did understand the implications, the tax implications of both the program and the loan forgiveness. Thanks, of course, to Sonjui for deftly moderating the panel. And of course, S.K. Raj, our president, for doing his magic and coordinating the webinar from behind the scenes. Last but not the least, I'd like to give a shout out to Amber Mehta, our treasurer, who helped coordinate this webinar and reach out to the panelists. This webinar will be posted on our website. Please do visit our website for upcoming events, upcoming webinars. So thank you once again and have a great rest of the day.
Thank you. Thanks, everyone.
Thank you.
Thank you very much.
Thank you.